Good afternoon. I'm Mike Miller with Miller Premier Investment Planning. I founded my firm back in 2007 and I specialize in retirement planning for pre-retirees and folks who are already in retirement. Um, been doing this now for over 25 years. I am a certified financial planner. And given the current state of affairs here in the world with the coronavirus pandemic, I felt it was necessary to go ahead and do a video because there's a lot of um, hysteria out there. And keep in mind that the media is geared towards keeping your attention. They sell advertising, and in order to do that, they have to have eyeballs. And the more people are glued to the screen and looking at their publications, the more advertising they sell. So naturally, when things like this happen, they tend to feed into that hysteria, and things that should be left to just the facts kind of end up getting sensationalized. And just understand that that is going on now. There are some hard facts with the pandemic that I need to go ahead and put out there. There's a good chance that the United States could see somewhere around 200,000 total deaths from this pandemic, and based on some charts that I've looked at, and the current trajectory that we're on, as well as the trajectory of some countries that are kind of in front of us on this, that started having deaths prior to our experience here in the United States, and kind of following those trajectories as well. With that being said, the markets have definitely overreacted, and that is not unusual. You can go back and you can look at market history, over 100 plus years. And what you'll see is we've been through world wars, we've been through SARS, we've been through 9/11, we had the financial crisis in '07 and '08. Um, and we were due, just so you know, we were due for a pullback. We were due for a recession, as well as a correction in the market prior to this pandemic. In fact, last year we started getting more defensive in client portfolios, and the reason was very simple. It was actually going out, looking at stocks, looking out in the equity space, and not finding anything that offered the proper return for the risk that we were taking. It's what we call risk premium. It just wasn't there. And when that happens, you tend to get more defensive. So we were more defensive coming into the year, coming into the crash that we experienced as a result of the pandemic. However, what you do need to know is that after the markets dropped, in some places up to 40%, some areas of the markets, some small cap space, in the large cap space was down over a third. That created some valuations that no matter what happens going forward, you would be crazy not to be buying here. So you need to know that we started putting money to work a couple weeks ago. And as you know, the market has bounced off those lows significantly. Matter of fact, last week we hit a point where we bounced up on the Dow 20% from the lows. And so does that mean that we've bottomed out yet? Good question. A lot of people ask that. I'll tell you this, nobody can tell you when the market bottoms or is going to bottom. Nobody can tell you that unless it's in hindsight. Nobody has a crystal ball, not even me. I've been studying the markets for a long time. Also was a code breaker, so I've got a gift in pattern recognition as well as high-level mathematics. And with all that, even, I can't tell you where the market will bottom out. That's impossible. There's just too many variables, too many unknowns. And I'm humble enough to share that with you. But with that being said, what I do know is that when you look at valuations on stocks relative to earnings, relative to book value, relative to cash flow, financial conditions, all those kinds of things, when you look at that, even with a big hit to gross domestic product, which we're expecting, just so you know, we're expecting about a 20-30% hit here in the second quarter on GDP. We haven't ever seen anything like that before. And that's just due to the fact that people are having to self quarantine. I mean, we're doing this social distancing thing. You know, the economy is stalling out because of that. But thank goodness the Federal Reserve is doing what they can do to keep liquidity out there, which is very much needed in the markets. And then also, our government. Our government actually stepped up in a bipartisan fashion and got some bills passed that was very much needed. So with those combined things, what I'm looking at is roughly about $4 trillion in total stimulus. When you combine all those things that they're doing, both the Fed and the government, and you look at the hit that we would experience as far as an economy, it basically balances out. And then another thing they're doing too that's real smart is they're looking at a backup bill just in case this should be prolonged. Now, of course, what does this mean? It means we're going to be piling up more debt. But in times like this, that is what is needed. I can definitely tell you that from studying market history, studying economies and things like that. You have to do this right now to take care of people, to take care of the folks who are out of work, as well as the small business owners out there that are suffering because they can't open their doors. So know that. And so what do you do? What can you personally do as far as positioning yourself going forward? Well, hopefully, if you were fully invested going into this drop, you didn't make the mistake and sell when we dropped like we did before we bounced. Hopefully, you did not do that. If you have, I would say that you probably aren't working with a financial advisor, so you're prone to the number one enemy of every investor, which is, guess what? It's ourselves. It's making emotional decisions with your money. We're all prone to that, by the way. And that's why it's important to work with an advisor, someone who can sit down with you, figure out what your goals are, what your needs are, and based on that, look at your resources, what your preferences are, things like that. Test what you're currently doing, see if you're going to be able to accomplish those things. Or what do you need to do to make those goals happen and give you a high probability of success. And battle test it. Run it against both the best of markets, the worst of markets. Figure out what allocations, which types of investments would be best suited for you. And then the key is the advisor is going to make sure that he sticks to that strategy and that plan. And when he does that as an investor versus a speculator, I'll talk about that here in a second. As an investor, when things get expensive, guess what he's doing? He's selling high. And guess what he's doing with that money that he just received as a result of the sell? He's buying some things that may have not done as well. He's buying low, smartly, of course. And then same thing with right now. When things get extremely low in value, and you're going out there and you're seeing investments that are yielding over 10% just in distributions alone. The price doesn't even have to move. Guess what you're doing there? You're buying. You're doing like Warren Buffett is doing right now, matter of fact. He just put a ton of money into Delta Airlines, which was a holding he already had. He had a ton of cash. People were criticizing him for it, just like I was kind of getting taken over the coals by a couple people last year about being defensive and being, holding some extra cash. Well, this is why. This is why we do this. And so I would encourage you, if you aren't working with an advisor, find one, preferably somebody who's fee only. It's not going to charge a commission so that there's no conflict of interest there. Somebody who is going to work up a battle tested plan, um, and obviously sit down with you and iron all that out so that you can figure out what you're going to do ahead of time so that you're not prone to that biggest enemy of every investor, which is ourselves. Now, let's talk about the difference between investing and speculation. So I mentioned an investor looks at things as where's the value at any given time. And they're looking at things from a long-term perspective. I'm not looking at what is the market going to do next week, next month, even over the next year, really. What I'm looking at is what is an individual security or investment or area of the market likely to do over a long period of time, 3, 5 years, for example. And based on that, I can then work backwards and figure out, okay, what is the valuation there? Is there a good valuation? And if there is, then guess what? We're going to take advantage of that. We're going to make that part of the portfolio. And then the same thing goes for current holdings. If we're looking and we're saying, okay, you know what? This has done really well. Valuation's really high. But looking forward, you know what? Maybe it's a little too high. Time to start peeling back. Speculators tend to do the opposite. Speculators tend to look and say, okay, oh my gosh, the world's coming to an end. Markets just dropped a lot. Panic. I'm going to sell. They follow the herd. It's called the herd mentality. And you follow the herd, you get slaughtered. That's how the investment world works. And speculators, they always tell you about their winners. They never tell you about their losers. And the bottom line is an investor builds a portfolio, well diversified, that's based on what they're trying to accomplish, based on their current risk profile, what they're comfortable as far as taking risk goes up front. And when they do that, guess what? They win. Hopefully you found this video helpful. I wish you the best of blessings going forward. Know that God is in control. We're going to get past this virus. I believe in a few months from now, we're going to be looking at things and it's going to be a lot better. And I've got a lot of reason to think that. I obviously have to really keep up on all of this. I've even talked to epidemiologists. It's gone to great lengths to make sure that the information that I'm acting on for my investors is good information and it's not sensationalized information from the media. It's based off emotions. I deal in facts, and that's what works over time. So God bless you. Please stay safe. Don't put yourselves at risk or put other people at risk. Stay home. Try to avoid contact with people as much as you can. Peace out.